All right. Good morning, everybody. Into the new year, I'm going to be working on my YouTube. It's been the place where I put all these recordings. So there are years worth of morning briefings there. And I'm going to start growing that channel out. So if you guys would do me a favor, the replay link is always shared with the Zoom link so that people who want to watch the replay uh, know where to find it. That is my YouTube page. If you guys go over there and hit like, subscribe, help me out. That would perhaps get the channel moving in the right direction. I've never really been interested in growing it out, but that's going to be my focus in 2026. So I'm going to see if we can wake that channel up, actually get something out of it. I used to teach quite a bit when it comes to trading, and with so many new traders around, I think it's going to become a database and repository for introduction to trading concepts that'll slowly probably build out into the advanced stuff that we used to do back in the day. So, and yeah, if you're watching right now, you should just watch on Zoom because then there's no delay. The YouTube was strictly meant to be a recording for those who wanted to watch it later. So if you're watching me on YouTube now, you're watching it delayed, and well, you should just join the Zoom like everybody else and be a normal person. All right, news out of Europe. They're up around 1.5%. They're trying to do something with the funds from Russia with that 2023 sale of the stadium. It's a sports thing. There's money tied up there that they've been trying to get released. Sounds like they're working on it. Small caps and the NASDAQ running neck to neck, side by side. The Dow lagging, but still in the green. It's VIX expiry today. It's kind of the biggest thing we have, right? It's not not that much, but we're going to get job numbers tomorrow, and we have the president speaking tonight. I've seen a lot of speculation on what it's going to be. The White House presser says it's going to be a little bit of a review of the things that he's already accomplished, right? A little bit of bragging. Hey, if you say you're going to do something and then you turn around and do it, I think you've got the right to point out, hey, I said I was going to do it and then I did it. But I'm not taking any sides when it comes to politics. They're all broken. That's why our system is so broken. So save your political comments. I don't want to hear it. The 9 o'clock, I believe it's 9 o'clock show, that's what the White House presser said it's going to be, is a look back, a review of what he's accomplished, and an update, I believe, a situation report. Not necessarily, they didn't say, right? There's a briefing. I'll find you the paperwork on what he's supposed to talk about, but they kept it vague. So you can speculate all you want on what it's going to be. They kept it really vague. And they're just not exactly coming out with all the topics in this list. So it's an address to the nation. It's in the diplomatic room. It's at 9 o'clock. There is some history behind that, right? Some of the situations throughout history, if you want to call them wars or not, has happened at 8, 9, or 10 o'clock at night. So, and yeah, the blockades are already in place. That was announced, right? That popped oil up. So you know, what's he going to announce? The why behind the blockade? I'm pretty sure everybody's got the why. So, you know, and it could be, it could be that he's going to continue to hype how people are going to get money back. The tariffs are going to turn into stimmies and people are going to get stimmy checks. I don't know. Don't get your hopes up that you're going to get some stimmy check when the Supreme Court hasn't even decided yet that the tariffs were legal and that the money that he's earned, that the U.S. has earned, that we get to keep it. So, yeah, who knows? But you can sit around and speculate all day long on what he's going to talk about. Who knows? Being unpredictable is kind of the specialty, and to keep the market off balance has been the plan that was put into place from the day that he got into office. It's been one of the most hated rallies in the last decade, and yet we just continue to run to the upside. So, you know, keep everybody off balance, keep them guessing, swap it up often, and then you have the Trump put, just like you have a Fed put, right? And you got the plunge protection team, and everybody does their part. So, a one-man plunge protection team, no less. We are going to get some crude oil inventories today. Then we got Bosick chipping his teeth. We got the 20-year auction. It's one of my babies. So watch the clock. It says 2, but it's 1. It's 1 o'clock. It's the 1 o'clock auction for the 20-year bond. Little bit of news out of Japan tonight. That's not a big one, but I would never suggest that you ignore news when you know it's coming. All in all, it's a relatively quiet day today, other than the VIX expiration. Pot stocks are leading with silver and crude and gold and energy right behind it, right? And all of that makes sense because the energy popped with the blockade and blah, blah. But pot stocks is leading. Hey, if you guys got into those pot stocks last week on the comments of the president, this is how it goes, right? If you look back when the election was going on, every time Kamala Harris spoke about legalizing pot, boom, it went up like crazy. Once she lost, it's really languished because it wasn't seen that this president would do a lot to legalize or change the status. And so it just kind of faded and faded and faded. Well, now with those comments, we've gotten a little bit of bump to the upside. So, yeah, you know, buckle up if you're trying to take that pot ride, because that's how it's going to go. Headlines will give you a little jot to the upside, and then it's going to fade back off. And then, you know, they'll eventually come out with another headline and it'll pop back up again. It's very much just like, you know, low float penny stock biotech. It's event driven, and without an event to drive it, it just fades back down. Right. So the recommendation is that you just buy the stock and continue to sell calls against it until your cost basis for the stock is upside down and completely zero. Right. Then you don't care, because if you average stock price is $0.00, then you don't care what happens to the stock. That's what I did with MSOS. I've got quite a bit of it. I keep adding a little bit more and then selling it off, paying it off with calls. Might as well, right? Sooner or later, someday, they'll figure that stuff out. I'm going to end up publishing this. It's not mine. Obviously, you can see it's on Tasty Live. Bitcoin versus the VIX, using crypto as an early signal for risk appetite. It's a really good article. It's just a little blog post. It's not that much to read, right? So I'll turn it into a PDF. I'll get this shared out. It is a good read. It's insightful. It's just a way to use the price of different things as an indicator or a tool. And if you don't do that at all, then this is a really good start to doing that. The call wall and the put wall have not moved. It's very likely that we won't see them move until maybe the end of the week or into the new week, which will be a short week. This is the last full week of the year. We're under the 10 and the 20. We're fighting against that 20 right now. That's that green line right there. It's the 20-day moving average. It's just showing on my 5-minute chart. We still have the 3 under the 10, and price is under the 3 and the 10. So we're primed for a bull surge. We need price to go through the 3 and the 10 and get above it high enough that the 3 comes back up through the 10. I'm looking at 7 or 7,500 by the end of the year. I know it's not the base case that everybody else has, but that's mine, right? I've been bullish all year. It doesn't matter. But I'm not Yardini, right? And Yardini has backed off on his bullish call that he's been bullish since April of 2000, right? But we're just talking about the next leg up or the next leg down. If you run probabilities, it is more likely that we tag 7,000 before we tag 6,700. And if you think about where we're at, that's not a perfect split, but you could bring that up and make it perfect. 6,750 versus 7,000 from our current location. That looks like a more even split. What's more likely, that we go down and hit 6,750 or go up to hit 7,000? I say in the 2 short holiday weeks that we're looking at, it's more likely that we go up and hit 7,000 versus going down and hit 6,750. But it's end of year, it's short weeks, and if you're going to put money into this, do it in a way that can be protected, right? There's no reason to take a binary trade that's strictly a win or a loss when you can convert that into, something in the middle. That's the great thing about options. So a skewed fly, a jade lizard, if you can afford it, maybe just at the money verticals, those won't cost very much. And just, be prepared for the entire thing to get wiped. So don't put a boatload of money into it. Maybe some YOLO plays, right? Something cheap where you just shrug it off if it doesn't work and you move on and you don't care. This morning, we're above the VWAP and we're getting a little extended from it. It's not out of control, especially since we've stalled in the last hour or so and we've been just kind of putting in this top. That has given the VWAP time to catch up. So that was our extreme right there. And now we've gone sideways and allowed VWAP to catch up with us a little bit. We could stay there all the way until we touch it, or 9:30, whichever comes first. We're just fighting the RTH of yesterday. This is the RTH high. And we've been wicking outside of that level and coming right back in again. So there's a significant amount of pressure right against yesterday's RTH high. Now we had a higher level than that, right? If you look back at the Globex and that print that we got, the 830 data that gave us that big bar. But really, we're just getting hung up right outside of that RTH high. $75,000 in the overnight fits with what we've been seeing so far this week. We had 76 yesterday. We're seeing a consistent, steady supply of volume coming in the overnight. We got to ignore the market maker move. It's because of the triple witching. They could be in here hedging like crazy. We would not know because we're going to see that signal anyways. And that sucks, but that's the way it is. This red line is Monday's close. It is really close to yesterday's RTH high. And it's lining up really well with what we're struggling with today. We still got that liquidity gap from Monday that I think needs to be addressed. So if we get through 68.92 cog line, which is this upper ADR half here, then we're going to aim for the full ADR right there, 69.32 cog line, and that will close the liquidity gap from Monday at the same time. But we're not even at that ADR half yet, so first we got to get there. There is the concern that if we get to one half early enough, we can go to the other half by the end of the day. That would be an inside day breakout to the downside with a 111 or a 1236 reversal, which, by the way, we had some really nice trades yesterday on that 111 and 1236. Hopefully you took advantage of that. Half back plays. It was just a all around decent day. So you can see that 68.11 cog line will be a front run on the lower ADR. It is worth considering that level since if we get to one side early enough, we can go to the other side by the end of the day. And that wouldn't be bearish or bullish. It would just be the wave form that price takes, right? Otherwise, you want to snap the full level, not just the intraday. And that would give us 68.92, yesterday's high. And then the fibs above and below. That half back was in play last night. We're done with it. Now it's Monday's close or the 20-day moving average, whichever one of those you want to use. And the possible 68.92 cog. That's going to act a bit like gravity. So if we can get above that 20, we're going to go to this. That would be a nice breakout of this box. If you can buy it on the low, try to get it before, buy it on the low for a breakout. That's the way I generally try to do it. Yesterday was an MDP. That's a missed daily pivot. So that's the first one. We get to count them consecutively, except it ended already. We've hit today's, so that's all we got. It would have been good to have missed today's by being above it. It's possible we could miss tomorrow's by being above it if we start that rally today and get above it, stay above it tomorrow. Then that would be our first missed daily pivot on the move back up, kind of running this next line up. Today's floor pivot is lower than yesterday. That's bearish. Price opened under today's floor pivot, and that is also bearish. We've hit it, and we're now above it, and we need to stay above it. We're back above the weekly pivot, which is a good thing. We're bullish above the weekly, bearish below the weekly. R1 is in focus. It looks like 87 or 88, not lined up on a really helpful spot. It's yesterday's channel low, but that doesn't really help. Globex high, basically. There is a concern of R1 S2, just like yesterday, right? So yesterday we had that concern of an S1 R2. It's the way it works. We ended up just tagging that S1, or excuse me, S2, and coming back in again. but when we were doing the morning briefing, we'd already had an S1, and that put R2 on the table. We didn't go there, but that's often what we end up with. So if we get to R1, we can go to S2. Of course, we can get above R1 and go to R2. Just like I mentioned yesterday, we can get back under S1 and go to S2. That's what we ended up doing. So let's see if we can, first of all, just get to that R1 and whether or not we get beyond it. If we get beyond it, it opens the door to the next R level. Otherwise, if we get there and we can't keep it and we can't expand, then we can come back to the floor pivot and then S1 and S2. Yesterday was supposed to be a sideways day. If you remember, the plan was if we break out of the previous day's range, we were going to run a reversal and bring it back in again. It's exactly the way we played it. We're back to the point of control this morning. And on this time frame, it's not a really clear, but we're starting to develop a second distribution down here, right? So around this 68.50, we're building it out. And then this 68.80, we're building it out. So two distributions. And then we get the thin area. So if we get underneath 68.42, which is an old school cog line, it thins out. And if we can get above 68.90, it thins out. Otherwise, we've just got both of these distributions and we're kind of ping-ponging back and forth between them. We got a big footprint back here, 69.11. If we do get a breakout of the value area, otherwise to the downside, we don't really get any help until 67.76. Huh. Every time I say that number. 1776. Ring a bell? Yeah. So we got to get out of the value area. Still no change on the 10-day, 30-minute volume profile in TPO. No new player, no new level has materialized. We spent a lot of time in the middle. We've built that out over days and days and days, and it's going to take a long time for that to move. Plus, we got to go to a new area and build out a new footprint, and we just haven't done that yet. There's some early candidates. This 68.50 is starting to show up as an early player. We could end up down there, but really it's speculation at this point. 68.82 is another one, and then 69.40. Either of those three could be the new home for the point of control, but we don't have anything yet. The VPOC that we marked out from Monday was hit yesterday in Tuesday's trading, but you could see how it was useful, right? We were bumping against it. Then we got the 8:30 data and we broke it. But even later in the day, we came right up and challenged that level again. So, you know, these VPOC lines, they are helpful. They are useful. And right now, this morning, we're still fighting that same area. And that's where today's point of control is. Now, the concern is that we've ran up into a bunch of sellers. And that's what we're seeing. But the positive side is we ran up into a bunch of sellers and we're still there. We ran into a bunch of sellers right here, right? Ran up into them, chewed through all of that liquidity, and now we've moved up into this level and we're chewing through that liquidity. Those sellers are either going to get smart and decide they want to sell it higher up, or we're going to absorb all of that that's in our way and then move up anyways. The threat is that there's just so much here that we can't chew it all, right? Just like the Thanksgiving turkey, there's just too much to eat, and we begin to work our way back down again. That doesn't mean we have to sell off completely, right? We're not talking about dumping down and crashing. Just if we can't work through that liquidity in the first shot, we'll pull back and try it again. So I got to see how we work through this liquidity that's sitting up here. The TPO really isn't all that different. other than the point of control is still showing in the lower area. So it hasn't played catch up yet. And the TPO this morning lines up really well with yesterday's intraday point of control. Next week, this thing will be back to normal. For this week, not really a big deal. Just we'll get by without it. I still need to draw those lines. Just hasn't been a big deal because I'm not trading the lines this week. We're 1.4% above the 10-week, so we're still in that positive territory. We're not overbought. We're not overextended, which should be obvious because we haven't gone anywhere. And looking at the daily, we got to get back through that 10, and I'm looking for a bull signal, all right? That bull surge signal. Price crossed the 3 and the 10, and then the 3 crossed the 10 to the upside. And that'll be a nice rebound back up from being underneath the 10, right? We're looking for one of these moves where we cross from negative to positive. Because if you think about it, if you're at the center of the basketball court, you can only go to one goal, right? You only got half a court to run. So if you're sitting at the 0 line, you can only go to the upside about 2%, and then you get overextended. But if you're under the 0 line, if you're, halfway to the other player's goal and then they get the ball, well, they got to go all the way back to the half and then got to go all the way to your side. So if we're under by a half, then that's a half to the upside and then a 2% move to the upside. We can get a 2.5 to a 3% move when we get that kind of thing, right? From -2 to +2, it's a 4% move. And we still wouldn't be overbought when we get those kind of moves. Not unheard of. We've seen them back here. And within 2 days, we went from being more than 2% under the 10 to being more than 2% above the 10. That's a 4% move, and we still wouldn't be overbought, overextended. Now, at this point, we're just beginning to turn and come back up, and we were a little more than 0.5%, but it could still equate to a 2.5% move with half given from under the line and then 2% above the line, and we still wouldn't be overbought. And we'd be looking for that capital rotation to come back into tech, right? We kept it in the consumer discretionary. We still got it in finance, even though yesterday was a red day. And that would give us very likely a rotation out of something else. All right, looking at what's down today, the VIX is down 1 3/4, but it's still up 9% over a 5-day period, which means it was up close to 11% in a 5-day period. It kind of makes sense that it pulls back a little bit. Bitcoin is down. Bitcoin. And really, I mean, that's about it, right? The VIX and Bitcoin and the Mag 7 down volume is down. That was up more than 15% in a 5-day period. That's a lot. So I'm not reading the Mag 7 stuff as bullish yet, just more of a reflexive bounce at this point, just because of how far it was down. Looking at what's up this morning, China, the Mag 7 up volume, junior gold miners gold, uranium, UFOs. So that's, those cheaper, low float stocks. Not all of them, but most of them. Energy, metals and mining, which at the moment, is silver really fits more into that than precious metals at the moment. Just, silver and gold both can be a utility. It can be a hedge. It can be margin. It can be, production, precious metals. Really just, I think that's where silver fits right now. Chips are up this morning. China tech, expanded tech is moving in the right direction, but not enough yet. We want more out of that. That's the IGV. You got to be careful with IGV. This one can move after hours the night before and then not move in the pre-market, and Thinkorswim will still tell you that it's, quote, up in the pre-market when it's not. It was just up after hours the night before. So if you see IGV or cloud on this list in the mornings, just go look at their chart and make sure they're actually moving this morning and that it's not just reading something from last night. You can see cloud down here, CLOU. Those two are the worst ones on Thinkorswim that you have to go in and double check them and make sure they really are moving this morning and that it's not just something from last night. So we got pot stocks, silver, crude, nat gas, gold, and gold miners, energy, chips, tech, China, airlines. Now, airlines were doing pretty good the last few days, especially with the really low crude and low oil. I'm surprised they're up again this morning with the price of fuel going up. That's now going to start to whack these guys, but not yet, right? Not yet. They're still up this morning. Although it's just a little dot. It's just a little algo print. Can't really trust that. It hasn't put any work in this morning. And the Mag 7 is moving in the right direction. But again, kind of just a couple of algo dots up there. We're not getting any candles printing yet. I'd like to see that sort of build out some. Solar and some of the Bitcoin is down. I guess it really just depends on which Bitcoin you're looking at. We have everything we need for a rally day. We got the right sectors. We got the VIX expiry, the Mag 7 chips, communication, cloud services. We got everything we need to get that to happen today. That does not mean we're going to rally, right? Just saying we have all the ingredients. And if we do get a rally, it doesn't even have to happen from the ingredients that we have right now. It could be some headline news that sparks us or some zero-day flows that come in and get us moving to the upside. The main thing is that we can rally today, and it can start with that bull surge signal. Cross the 20, the 3, the 10 to the upside above 6,900. The trick with this bull surge signal is we have to get above the 10 far enough to drag the 3 up through the 10, right? We need the 3 to chase us. So to get that 3 up, we have to cross through the 10 and then get above the 10 far enough to make that happen, like it did back here in the past, right? We had the 3 really close to us to the downside, so that we crossed the 3 pretty easy, but then we had to get above the 10 high enough to drag that 3 up through the 10. Otherwise, if we don't outrun the 10 and we just kind of hang out around the 10, then the 3 doesn't have that same behavior. But we've got a cluster of moving averages right over our head, the 3, the 10, the 20. We got to get through all of those. And the only thing underneath that's helping us out is that 50 period daily or the 10 week, because they're kind of the same thing.
So if we lose that 50, then it's game on. We're looking at 67.50, 66.50, and then we'll renegotiate 6,600. Today, we're looking for a TRB setup, trend line breakover. I love this trade. It doesn't have to happen today, right? First, we sell off, and then we reverse, and the goal is to come back up to the previous level. That's the goal. Now, what makes the TRB so good is we usually do it in a single candle. So I'm not looking to slowly get candles all the way back up here. That would be more of a scoop pattern or a cup pattern. The TRB, the best ones, you get the entire move in a single day. That could be today. It could be. I'm thinking not yet. We spend another day sideways, so we stay inside of yesterday's range. Maybe we wick out on either side, and then tomorrow or even into Friday, we get that single candle rush, and we rush it back up here to the previous 69.80 area, whatever it happens to be. And it's not a perfect system, right? We're not talking about getting right to the tippity top. It could be that candle's high, or even just up in that candle's upper area, 69.60 area. So if it is today, if we come roaring out of yesterday's range and break that 10 today, then we want to try to run it. That's going to be the plan. Expect it to continue to push, run the cogs, run the measured moves, continue to run a dynamic fib level, and just run it all the way back up. But until it proves that that's what we're going to get, watch for the reversal off of yesterday's high at the 111 or the 1236, right? Because if we're going to reverse and come back in, it will happen on one of those two lines. I'll be taking the short if we get the breakout, most likely. Depends on what it looks like when we break out. But I'll probably be taking the short. And if it's wrong, then I'll take that loss. I don't care, because if it's wrong and we continue to push, we're going all the way up here. There's plenty of money to be made to make that loss back and make some money on the upside. Plenty of room. TRB. If you search for it in the chat, I've posted about it before, right? So keep your eye on the clock. We got the auction today. Don't forget, we got VIX expiration. Tomorrow we get jobs numbers, which is another reason to think we might just stay sideways today. I'm kind of a big fan that it's going to be one more day, and then we get that big breakout bar and we run back up in a TRB. Because maybe we have to wait on job numbers tomorrow. Maybe, right? So I got, guys, be careful, be safe. I'll see y'all tomorrow.